The Newsday continues here on One News Now. I'm Danny Laurel. Now here are the biggest stories on the economic and corporate front. The country's full-year economic growth for 2022 exceeded the government's target. Fresh data from the Philippine Statistics Authority shows that the economy posted a full-year expansion of 7.6% last year. That is higher than the 6.5% to 7.5% target range. This comes even as economic growth slowed to 7.2% in the fourth quarter. The PSA says wholesale and retail, manufacturing, and financial and insurance activities drove expansion in both the fourth quarter and the entire year. Socioeconomic Planning Secretary Arsenio Balisacan says the Philippine economy grew faster than neighboring countries like Vietnam and China in the fourth quarter. Balisacan attributes this to pent-up demand and increased economic activity.
Our robust performance in the fourth quarter reflected strong domestic demand, with 3/4 contributed by household consumption and almost a fifth by investment. The improvements in labor market conditions, increased tourism, revenge and holiday spending, and resumption of face-to-face classes supported growth in the quarter.
All right, revenge spending and pent-up demand driving our growth to above target levels. Does this bring new insight into our spending habits and perhaps resilience? Here to weigh in, we have with us Nikki Mapa, Chief Economist of ING Bank. Hi, Nikki.
Good morning, and thanks for having me back.
All right, Nikki, I mean, it's hard to impress you, but nevertheless, are you impressed with these levels? And a better question is, did we just spend more than expected, pent-up demand at that, or did we work hard for this growth?
Yeah, well, I think Secretary Balisacan sort of hit it on the head. About 3/4 of this growth was driven by households. And if you break down household spending, a lot of it was in recreation, hotels and restaurants. Sounds a lot like revenge spending to me. Maybe some of it because of school reopening and whatnot. But I think for the most part, Filipinos just wanting to get out and about after about 2.5 years in lockdown. This was the first Christmas that we had without face masks and restrictions. So maybe that added to the growth as well. I think, the fourth quarter number, the full year 2022 number was a big story, but the bigger story, the bigger question is how much further can we take this? Will growth momentum continue in 2023?
All right. Well, of course, that's the next question. But let's parse through the data here. First of all, just your insights on the PSA mentioning higher incomes also contributed to this growth. Anecdotally, I don't feel that, right? You feel people struggling, just spending and with holes in their pockets. How does this happen if it's just revenge spending?
Well, I think part of it is because you see an improvement in the labor data. As was, I guess, mentioned previously, you had unemployment rates falling. Underemployment rates are still quite high, but at least on a year-on-year perspective, we're seeing a lot more economic activity leading to more job creation. However, inflation is at multi-year highs, so wages are getting eroded substantially. So I think for the most part, one of the reasons why we had expected growth initially to slow down in the second half of this year was because of high inflation and the natural reaction on consumption to slow down. But for the most part, it looks like Filipinos have just decided to take this on the chin and just dip into savings, which is one thing that the BSP survey on consumer expectations showed. These were the first 3 quarters of the year, Filipinos dipping into savings just to enjoy this increased mobility. But we're starting to see that number come up now. Filipinos setting aside money back, trying to build up savings once again.
All right. Highest growth since 1976. Is this something that we are seeing in other parts of the globe just because of, I don't know, tough or a low base year pre-pandemic? But then fourth quarter, you would imagine it wasn't as low of a base compared to the previous quarters.
Yeah, but this is the first time that people are able to meet up without masks and all restrictions. I think that from our discussions with other analysts in the region and their experience with monitoring economies that reopen, it usually takes about a year for this sort of euphoria to die out, or this revenge spending that some people are calling what we're seeing now. It takes about a year for that to die off. So expecting a possible pullback in household spending this year.
But can you nuance that? Because you did mention that, off cam, the issues that you expected would be happening, especially like the erosion of incomes because of inflation, might be biting us this year. But we also see inflation hopefully having peaked, or at least peaking in the near term. Oil prices, agricultural imports, for instance. Ceteris paribus, if inflation has peaked and gone down and our spending is the same, why the lower outlook for this year?
Yeah, well, one reason for that is that you're finally going to start to see people setting aside for savings or rebuild some of that savings that they had drawn down over the past few months. Now, maybe with reopening, you pretty much say, okay, we can, we'll dip into savings for now. But eventually you're going to have to start building that back up again. So I think we're going to see that this year. This was noted in the most recent BSP survey, seeing a bit of an uptick in savings rates for Filipino households. One good thing, I guess, one positive that we want to take into 2023 is that we do get the tax cut. Thank you, Train 1. This has been implemented. So hoping to get a little more punch to that purchasing power amidst these high prices.
Okay, your comments on the sectors here. Services up 9.8%. Agri down, might have been expected from the rains. Industrial production up by 4.8%. Just on the fundamentals of the economy, did we produce better than expected?
Yeah, well, the services sector is just a mirror of the household spending numbers that we're seeing. So strong household spending numbers reflected in the strong services sector. They pretty much just mirror each other. So I think this is once again, a factor, or the product of all that pent up demand that we're seeing. To end last year. But I guess once again, the bigger question is, does that continue in 2023?
Investment growth 5.9% in the fourth quarter versus 21.8% in the third. What does this mean exactly?
Yeah, we're starting to see capital formation still positive.
Okay.
However, your rapid fire rate hikes by the BSP last year are finally starting to take root and hurt investment momentum. I think the other side of the data dump today, Philippine import data, shows that capital goods are in contraction. I think for the fourth straight month. Raw materials, especially raw materials related to construction, also in deep dive. So, all the rate hikes that you brought out last year to slow inflation have also slowed growth as designed. And I think that's going to sap momentum this year. And with rate hikes projected by the BSP for the first half of this year, we could see growth slowing, at least on that side of the equation.
Okay, are you hopeful that government spending or expenditures in the government this year will be an improvement from that? And you mentioned, less capital formation in the fourth quarter, but Marcos has mentioned he's seeing growth at 7%.
Yeah, well, that's a very ambitious target, but hopefully we can hit it. However, if you look at the equation to growth, government spending might still be positive this year, but because of the fiscal, the lack of fiscal space, you have debt levels, debt to GDP levels above 60%. It's going to be, a tall order for the government to find a way to fund additional spending if they do choose to roll it out. This current administration doesn't sound like they're in the mood to be levying fresh taxes. In fact, they even cut income taxes this year. So, that might be very difficult for them to find funding they do want to spend this year.
Which was my next question. What's your take on taxation this year, at least for the so-called sin stocks? There's some proposals on wealth taxes, proposals on junk food taxes, higher levies on beverages for alcohol drinks. Is this the time to be doing that, especially above 60% debt to GDP?
Yeah, for sure. We need to get back on the fiscal consolidation path. In fact, if you look at the fiscal consolidation timeline, it's quite, I'd say, extended in the sense that they want to lower the debt to GDP ratio in the next 3 years. And I think the longer you stay above this threshold, you're always leaving yourself open to possible ratings actions from at least one of the ratings agencies. So fiscal consolidation, I think, has to continue. They need to find fresh sources of revenue. especially after you cut income taxes. So maybe that's one give and take they can do. They cut income taxes, but they'll have to find more targeted taxation for the wealthy, for the lux shoppers out there. All that, I feel maybe that segment can be taxed a little more heavily to compensate.
Other side of the trade deficit coin, which is exports contracting, whereas the expectation was a growth close to 10%. What is happening here? Is this a one-off, especially since we're hoping, now with China back, are you factoring that into at least our trade?
Yeah, well, we had expected exports to actually contract for some time now. Actually, the last 2 months were a bit of an anomaly, largely because we're so dependent on electronics exports. And if you look at our trade partners, Taiwan, South Korea, mainly the export value chain for electronics had been struggling because of softening global demand. And with global growth expected to slow this year, the US, parts of Europe possibly facing close to recession or maybe even full recession, that's a cause of concern for our export sector. But maybe if China can offset some of that and I guess compensate for loss of demand coming from the US and Europe, then maybe that's one thing we can hope for in the second half of this year.
Rate hike. Just one more? Kaya pa ba? Kaya pa ba to bring this to 6%?
Yeah, well, I think that's a great question. Where's the BSP going to take the terminal rate? But the bigger question really is who's going to be taking over Medalla as he retires mid-year? Medalla can push it up to 6%, 6.5%. But if someone comes in, fresh term for a governor, I think that's the bigger question we have to, or at least the bigger issue that we have to look out for in the coming months.
All right, and Nikki, your projection for this year for GDP, given the figures coming in?
Well, there are a lot of challenges. We talked about the triple threat, high inflation, elevated interest rates, and the fiscal handicap. So looking at 5%, maybe some upside for that if consumption continues, if inflation falls very rapidly. But right now, base case is for about 5.2% for growth this year.
All right, so 5% with risks on the upside. Thank you so much, Nikki Mapa, Chief Economist over at ING.
Thank you. Take care, Steve.
We'll be back with more stories after the break. Keep it here on One News. And you're still watching One News Now. I'm Dani Laurel. Mondonisen will acquire a 15% stake in Figaro Coffee Group, or FCG. In a disclosure to the Philippine Stock Exchange, Mondonisen said it will purchase the shares in Figaro for 1 peso each, bringing the total value of the transaction to 820.3 million pesos. Figaro will use the proceeds from the share sale to finance its expansion plans. FCG operates and franchises a network of restaurants, including Figaro Coffee. Meralco is set to start sourcing 670 megawatts of its power requirement from the wholesale electricity spot market, or the WESM. This move comes after the expiry of Meralco's 30-day emergency supply deal with Aboitiz-led GN Power Dingginin Limited. It was supposed to be covered by a deal with SMC Global Power, which was subjected to a temporary restraining order. Meralco assures its customers of measures to protect them from volatile and higher prices of electricity. For more updates, visit News 5, The Philippine Star, and Business World Online, or visit our website, onenews.ph. For more in-depth analysis, you can also catch One News on the Signal Play app. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Dani Laurel. Join us again At 2 p.m., we are One News, all sides, all the time.